if people were to ever check our group chats, I'm always sending you random businesses and I'm like, dude, you got to kick the tires on this one. So one was a company called RaceWire that I do a lot of 5Ks and like half marathons. And they're the company at the end of it who has the line that takes your chip and your time. And you're like, oh no, I've been up and down this industry like 10 times already. I've already looked at this one.
Didn't look at it, we bought it.
You bought that one. Wow.
One of the questions was around how's the job changed? And like the early just job description, I was an associate at the time. So like structurally the role is just different. But also in that time frame, like that 2015 to 2020 time frame, M&A strategies were particularly popular. The market from a buyer perspective, right? That's how I think about my market. They loved these like vertically focused consolidation strategies where somebody was able to kind of bring together an industry. And so I spent a ton of time just executing sort of add-on M&A for portfolio companies. All of 2016, all I did was one portfolio company, a company called Blue Star Sports that now is Stack Sports. We did 8 deals and sold it on the 1-year anniversary of our initial investment. And one of those was RaceWire. Ryan Henry is still somebody that I check in with every once in a while. Cool little company, another good example of something that's like, yeah, there's a really valuable, little niche business here.
So I want to dig into Blue Star just as an example of how some of these deals can work. Is that called a platform strategy? Is that called a buy and build strategy? Is it called a roll up? What do you call that?
Colloquially, it's called all of the above. I refer to the business itself as the platform. Depends what euphemism you want to use. I think roll up has a bit of a negative connotation at this point. So I'd probably call them consolidation strategies. That market has changed a lot. And I think the buyer universe's interest in those kinds of businesses is different than it was, less exciting probably to the buyer universe now than it was. And so like PSG's M&A volumes, I do think a lot of people think of us basically as an M&A shop. They think of us as we do software roll-ups. And I think that's changed a lot. Our add-on M&A volumes probably peaked in 2021, maybe it was 2022. I'm a little loose on the stats, but as a reaction to what the market is demanding, which is, you have to consolidate the businesses, you have to build a real company, you have to deliver a great product. And a lot of the time, the consolidation plays, the issue that people would have with them is they get caught up in tech debt. And so we've learned a lot along the way. I'd say today, in reaction to what we've learned over time, but also in reaction to what the market is interested in, we're far more surgical about what we're going to buy, why we're going to buy it, what the integration plan is going to be, et cetera, than we were at the time. But, that was what the market was demanding at the time.
So I want to reflect back maybe 5 years and compared to today, Chris. Would you say that sourcing is more competitive than it used to be?
I think it'd be hard to say that it's not. I certainly think that the lower middle market is more intermediated or better covered by investment banks and advisors than it was. I think founders and sellers are probably more sophisticated than they were. You've seen a lot of firms build really great businesses by pursuing a sourcing model, which isn't new, right? Like you've seen people continue to invest in a sourcing model as a result. And yeah, I think the market is better covered than it was when I started.
We were talking to Larry Contrella, who's in a similar role as you, but at JMI. And he was saying that when he first started, he would physically look through like the Charlotte Business Journal for companies that were out there. And he said it's way easier to find companies now that everybody's online. And there's also, like you mentioned, investment bankers who are stepping in to help to make these connections. So in some ways, it's easier to find, but that also makes it easier to find for everybody else to get in front of them and also try to make a deal.
I listened to Larry's episode as a prep for this. If he's the fastest guy to ever be on this podcast, I think I might be the slowest. I think you have to find a different edge. And I think ideally it's a relationship driven game, right? Where like, ideally you're building a relationship over a long period of time where we want to meet great companies very early in their life cycle. We want to be as helpful as we can to them. But it's pretty rare that you're going to get a bilateral call where a founder is just going to say, hey, like, I want you to take a look at this. The goal for me, at least, isn't necessarily that. I'm not expecting that I'm going to be able to achieve, like, I'm going to get a bilateral call, like they just think I'm the best partner. I love that. And for the things that we're really interested in, we'll try to make things happen on that basis. My goal would basically be 100% coverage of when somebody is ready to think about a transaction. I want to be one of the top 3 calls because I've built that relationship with them. I've added value. They understand that we know the space, that we have a thesis, that we're going to have thoughts, and that we can be value add partners to them. That's really the goal. And we've invested a lot in trying to find those businesses as kind of scalably as we can. Larry referred to like, hey, when LinkedIn started putting trending headcount growth statistics, that made it really easy to identify the companies that were doing really well. Think of that as a perfect example of a smoke signal where we just have attempted to build some structure around that and really automate how do we keep track of the best performing businesses and how do we make sure that we're seeing those and we're getting in front of them and we're spending time with the right leads.
What are some other smoke signals? What do your spidey senses tell you?
This is less like scalably trackable, but I absolutely love to find businesses where the market and the reputation sort of speaks for itself, right? Like businesses that have achieved an exceptional degree of like customer love or partner love, I always think are just absolutely outstanding. We invested in a business last year called Savvy Money that I'm extremely excited about. And that's an example of one where like I've never seen more positive market signals or more positive market chatter than I have seen and heard around that business. They basically embed a credit score module into the digital banking platform. So if you're logging into your bank's portal and they're a savvy customer, you can see your credit score right there on the portal. The digital banking platforms love it. The customers love it. It's really kind of filling a need. Like that to me is a great sign of both product market fit and strong execution against a thesis and meeting a need.
When I was at Parts Tech, you'd be shocked, or maybe not shocked, at how many investors approached us because they'd be talking to a shop management system. So someone we partnered with who was the core module for like storing everything the shop does. They were the system of record and we were the procurement application within it. And they'd be doing the due diligence and that. And they're like, "Ooh, what's that app you keep going into over there to buy parts?" And they're like, "Oh, that's Parts Tech. We love them. We work with them." They're like, "Can you maybe introduce me to them?" Chris, I want to talk about any crazy stories you've had from sourcing. Have there been any unexpected places you've either flown to or rocks that you've had to turn over in order to try to make a connection?
I've done meetings in, Lafayette, Indiana, which is not exactly where you'd expect to find a software business, or, middle winter in Halifax, Nova Scotia. Very, very glamorous stuff. One of the funny interactions that actually did result in an investment and a successful investment for us was a company called Pineapple Payments that we started with Brian Shanahan, one of the co-founders of Card Connect, and with John Halpern. We met Brian because he was a board member of a little software business in the church space based in Pittsburgh. And Marco and I flew out to Pittsburgh early on. I mean, I was a month into the job or something of the sort. Brian came to the meeting to sort of help the company evaluate the situation, drove me and Marco to the airport, and we just kind of kept in touch. And eventually when he was thinking about doing something next, that was a easy conversation and like a good example both of sort of relationship driven sourcing, but it was also a good example of like, that's a business that we started with a $5 million check just because we wanted to back Brian and John. Ended up being a $40 or $50 million check.
How much do you think brand equity value gets you in the room now? We covered earlier the come up that the firm has had from 3 guys in a garage to almost 300 people and 30 billion in AUM now. Do you think that the PSG name helps you get into meetings?
I think being known and understood as somebody who's active in a market that has a thesis or has experience really matters. I think being relevant to bankers, and like we've heard this a lot from companies where they're like, yeah, we talked to 3 or 4 or 5 bankers and had them pitch, and like you were on the short list of the kind of buyer universe. Like I think all of that matters to getting into the room, but the follow through on that is where it really comes through, right? Like nobody's going to do a deal with PSG because we have a great brand. They're going to do a deal with PSG because they meet Chris Nesbitt and they meet Chris Collins, or they meet Marco Ferrari or anybody else at PSG. And they think these people can be great partners to me. They can be value add. We were kind of exchanging notes on sort of the value of authenticity and vulnerability. I find that to be a massive edge in that sort of sourcing motion, right? Like the ability to kind of build trust and like human connection to make it clear to people very quickly that you're going to be a great partner, that you're going to be level-headed, that you're going to approach things from a perspective of compromise, that you're going to see multiple angles or multiple perspectives. That is the core of like the follow through on, hey, brand can get you in the door, but it's really up to me to follow through on what they might have heard and convince somebody that I can be a great partner for their business.
Being a CFO, you know how much I love tools that actually make the lives of accounting and finance folks easier. One of my favorite tools right now is Rillet, the AI native ERP going head to head with NetSuite. Yes, someone is finally doing it. I met Rillet 2 years ago when they were still in stealth. Since then, they've absolutely taken the finance world by storm. Their mission is to make the zero-day close a reality, and they're actually doing it. Customers are literally closing their books at 1:35 p.m. on the first day of the month. They've got everything you need to scale your business. Complex revenue recognition, native integrations, custom reporting, multi-entity, close management, and much more. They're only a few years in and are already supporting NASDAQ publicly listed companies. Yes, seriously. If you want to scale your business on an ERP that wasn't built in the 90s, you need to check out Rillet. Book a demo at rillet.com/CJ. Oh, cool, that's me. That's RILLET.com/CJ. RILLET.com/CJ. Tell them I sent you there.